I'm trying to keep up with you guys. All right, everybody, welcome back to Cashflow Chronicles. We're here with the Patels. Boss lady just popped in for a brief second, but we're excited.
She's not a Patel. She didn't take my last name, bro.
I mean, it's smart lady. Smart lady.
Miss
Uh,
Patel didn't earn this
Get the
degree.
hell out of
You know
here.
what I'm saying?
Get out of here.
January 30th, 2024. Welcome back, everybody. Interesting day in the markets. Kris, I know you already touched a lot about this on Finance Junkies, but dude, they made over $100 billion in cash flow from operations, my guy. And I just don't understand how Google went down on earnings after making $100 billion in cash flow. It just didn't
I
make any
wouldn't think
sense.
that. It's a gift, man. This kind of stuff when it happens, gift. Think of all the people that, like I said, the people that sold in Q3. They're like, oh my God, Google missed cloud revenue growth by 200 million. Oh, everything is over. Sell, 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 and they sold at 120. Okay, what happened after that? It rode up to like 160 when the entire market was still waffling a little bit, right? So, whenever the market is willing to give you these discounts based on just short-term stupidity, bro, take it. Me and you both know our fundamentals, right?
Yeah.
Fundamentally, the company is strong. That's all that really at the end of the day matters. In the short term, markets can go up, down, sideways, whatever. And I think the expectations were set a little bit high. And Google, unfortunately, that one thing is now being harped on, like, oh, they missed ads revenue expectations. Who's setting these expectations? My thing is, look at the bottom line. Is the EPS growing? They beat EPS by a crap ton margin.
Huge.
So I would say this is where just chill, accumulate shares at a discount. When the market comes to give you a discount, don't be like, oh my God, why am I getting a discount? Just enjoy it. Enjoy the discount.
It was a surprising. I mean, Kris hit it on the head, right? It had over $5 EPS for 2023. I was cool to see that $9 billion in revenue for the quarter for Google Cloud, 800 some million or something like that for net profit. So next year, I'm anticipating they're going to make $4 billion in profit, probably close to for Google Cloud, like that.
Oh
that
yeah, for Google Cloud, yeah,
yeah, that on its own, like it's huge, right? And to think that when you compare on a cash flow to cash flow from operations basis, Google comparatively to Microsoft is, closing in on 3 trillion, if not already surpassed 3 trillion. And Google's literally a third behind, and they're making more cash flow, right? It's insanity when you think about it from that perspective. And I didn't really dig too much into the Microsoft numbers. I don't know how much they grew year over year, but the fact that Google was able to grow 13% year over year is just absolutely insane. So crazy, absolutely crazy. Well, I don't want to harp too much on Google and Microsoft unless you have some specifics that you wanted to highlight.
No, I just want to highlight one thing. Earnings, the markets. You have to remember the market runs more on expectations than reality sometimes. So right now, everyone is super bullish on ChatGPT. So Microsoft is just running like crazy. Google is kind of in the same boat a little bit where the expectations are in reverse, where it's like, oh, Google's going to get disrupted. That's why the multiples should be, in my opinion, even. I think Microsoft should be trading at a 30 multiple relative to its growth prospects, and Google should be trading at a 28 multiple relative to its prospects. But it's completely diverged right now, where Microsoft right now is getting a huge premium because of its AI offerings and also its growth. Some of it is actually very deserved because they are growing a lot. On the other hand, Google is still growing, but a lot of people are saying, well, they're the dinosaur company, so no one wants to be in dinosaur company land. And I'm looking at the numbers, and I'm just like, fundamentally, this is an undervalued company. So from a risk to reward, I think Microsoft is more risky than Google is. But that doesn't mean that Microsoft can't keep going higher, by the way. It's just, like I said, from a risk to reward standpoint, buying a company that's trading at a 37 PE, that's growing at the rate that they're growing, versus Google, which is growing at a 12% growth rate, right? Per year. And then on the top of it, layer on that discounted PE, you're safer on Google's side from a risk to reward standpoint. But I think a lot of what we might discover with Microsoft is that a lot of their valuation has been brought forward because of the expectation in AI growth. And
Mhm.
I can't say when that AI growth is going to slow down materially. I think
Mhm.
eventually it does happen, but until it happens, Microsoft has a nice future ahead of it. And they're still a very important company. They're not going anywhere. The cloud business, even without the AI portion of it, is still growing pretty rapidly. So
Yeah.
if you look at I think there was a great chart that I had just saw when it comes here it is. Let me just put it up real quick. So this is why Microsoft has the valuation bump and Google does not have a valuation bump just yet. So you see this Azure growth number. This is actually a very important thing. So you can see here Azure growth was starting to deaccelerate and actually go down significantly to back like to something that's more industry to more that's
Comparable to Google Cloud, to
yeah,
be honest. Yeah.
right. Exactly, right? But because of AI, a lot of people started to buy Azure services, so you got more cloud infrastructure spending. So now it's kind of topping off and leveling off a little bit, and it could actually grow. So they went from 500 million to 2 billion to 4 billion. So you can see here that it's actually boosting up Azure's growth numbers. So this is why the valuation on Microsoft is good. Like they're getting a higher valuation. I wonder what this looks like for Google, where Google's GCP revenue is definitely slowing down, but I think this time they actually did well. I think Google, I wonder how much did GCP grow though? Let me see.
I don't
Hmm.
have that number off the top of my head. I mean, I was surprised that it went, um, north of 8 billion for the quarter. So it was nice to kind of get that. Actually, do I have it here? I have Microsoft.
I found it. I
Yeah, I
found
have
it. I found it.
Microsoft. I don't
It's
have Google open.
they grew their I'm sorry. Let me just put it up real quick. Um Share screen. Share. Okay. So right here
Oh yeah,
is their
right.
numbers, right? So if you see their Google Cloud revenue, that grew by 26%. That grew to almost 9.2 billion. But what's more important is that their operating margins are growing on Google Cloud, which means that they're actually generating positive operating income, which in the past they weren't because they were focused on hyper growth without profitability. Now they're actually profitable. So that's
The
good.
year to give context, the year ago quarter it was not making any money. Now it's making over 8 billion, right? Or 800 million. I'm sorry.
800
So
million. Yeah, and that number is going to continue to grow.
yeah,
You know, I think this is the key to I think the valuation of Google going forward is their operating profit, it's growing, but on top of it, their margin is expanding. And I think
mhm,
that's the part that a lot of people are not necessarily looking at that I
yeah.
think they should.
And I
That
think that's going to
they're
be lifted heavy by cloud,
yeah,
especially now that we're past that break even point for them.
right. So instead of it taking away, it's actually adding to. And so if you look at Google's business segments, right here, you've got their search business is still up, their YouTube is still up, and that's growing at double digits. I mean, Google AdSense is slowing down a little bit, but this is like not the biggest thing in terms of future growth for these guys. And then you look at Google Play, like their services, that's growing at 23% year over year. Google Cloud is growing at 26. So, if you look at this in a combination, they're doing well.
Yeah, and I
Ad
think
revenues,
I
but
want to
yeah,
say
sorry.
I think Google Cloud last quarter was in the low 20s. So the fact that it's getting closer towards that 30% range is very promising because if you compared last quarter the cloud growth between Azure and Google Cloud, it was very significant. This time around it's a little bit closer. So
Yeah.
I'm very curious if there's going to be a reacceleration. I mean, I know there's already some decent growth on GCP, but is it going to continue closer to the 30% range? And now that you're kind of seeing that pivot point of profitability within the Google Cloud segment, it's going to be interesting going forward for sure. But
Yeah.
the thought process that I might be having here, Kris, and it might allude to what like Tom Lee, and I know Amit's been talking about this because he goes live 18 times a day, but
Hmm.
Tom Lee, which is not a knock on him, by the way, I'm just more than impressed than anything about his ability to continue putting out content. But Tom Lee, who is a guy that I've been listening to very closely over the past 6 months, and I agree with a lot of what he's saying. I think a lot of this has to do with the fact that people are still pricing in 5 to 6 cuts for the year. And I have a feeling that the hammer of God is going to come down tomorrow with Jerome Powell with the FOMC meeting notes that are coming out at 1:30 or so. And he's going to come out and say, look, like, I don't know why everyone's still thinking we're going to do 5 to 6 cuts. The first cut probably won't be until the May timeframe. And so I think that with that, this over exuberance of what we've seen in Google's share price potentially, and maybe some of these other folks like Apple and Microsoft, et cetera, maybe this is just the first line of defense that we're starting to see crumble in this, say, 5 to 10% pullback that we should be expecting over the next month and a half. And I'm not saying we're going into some sort of bear market. You know what I mean? I'm just saying the market has been overpriced for, I would say, the past 2 months at this point, kind of anticipating what we're going to hear about tomorrow. And I just don't think that the words that come out of JP's mouth are going to be the words that everyone is hoping for, or at least that's what the market is pricing in for. So I think that this might be the first piece, the Google impacts that we're seeing today being the first piece of that.
Yeah, I agree. I was thinking that today too, where I think like the realization that we're in a frothy market just came to like everyone's mind today. It's sad, but I think Amazon is gonna have to try to save the market on Wednesday. I think they're reporting on Wednesday.
Thursday afternoon. Yeah.
Thursday.
You might be right.
But I think a lot of people fear is going to start to creep in again, and it's going to be a pullback. I agree with Tom Lee to maybe 7 to 10% even if it goes really bad. And then after that, we could ride higher for the rest of the year. So I'd say, we could be in for some fear going forward. Yeah, we'll see what happens, man. We'll see what happens.
Amazon and Apple both Thursday after the bell. So that I think will be, I'm anticipating, I don't know. It depends how rough everything happens between tomorrow and the second half of the trading day and the beginning of Thursday. Because if it is truly a bloodbath and we are down, say 2.5% over the next 2-3 days, after market closes on Thursday, it could be a breath of fresh air to say, okay, it's really not that bad, right? And my hope is that would ease a little bit of the pain on Friday. That's kind of what I was expecting. I was kind of expecting the market to stay kind of flat, and I guess it kind of has to an extent ish going into the end of close today, with a little bit of like anxiety going into tomorrow. But this Google piece, I think, was a little bit surprising. I was not expecting it to kind of pull back, but it is what it is. You can never predict these things. But I anticipate that Apple and Amazon earnings will help subside maybe some of the anger and angst that's going to happen throughout the rest of the week. But I think even still, you're going to see a slow drag. A lot, in my opinion, you might see a 1.5%, 2% down day in the next like week or so. But after that, I think it's going to be a slow drag, -2%, -2%, or sorry, -0.2%, -0.2%, like very slow dragging days of 4 or 5 days in a row, slow, maybe 1 or 2 days up, but 0.1, 0.2 here. So very flat, but probably in the wrong direction sort of days. And eventually you're going to be coming out at the end of February, beginning of March, being like, okay, the march towards the May rate cuts are going to happen. And I anticipate a May cut is probably reasonable. Shit, we're still 4 months away before when that would happen. So that's just kind of my initial thoughts. And I anticipate that we're still going to see a great year, I think. I mean, just look at the precursor for today. I just think that there just needs to be a little bit of normalization, and some companies need to grow into their current valuations.
Yeah, no, I agree, man. I think a lot of when something like this happens, just opportunity to be strategic. But there is one thing that does scare me. Let me just show you. And I think that this is going to follow the trend and the pattern that we've seen historically. Have you ever seen this before? Right here?
No.
Okay. So this, in my opinion, is what the AI bubble is going to look like. It's very similar to the .com thing, but basically it's like a 3 to 5 year cycle. So if you look at like the .com bubble, it started to go up 20
Mm,
what is it, 1998, then 99, and then 2000, and then the crash, the eventual crash, right? So the likelihood is that by 2026, or maybe even part of 2025, we'll be at the apex of
mm,
that bubble, and then you'll see the giant crash. And so the timing, if I had to say, I'd say that, we still have a good amount of room to run, but then you'll see that precipitous drop. And I think this is the key, right? When you have the valuations, they just go way too high. And then eventually the value creation comes up, and then it kind of levels off and they kind of meet somewhere in the middle, right? So this is the whole, like, this is what basically, I'm not sure if it was I think Soros said this, or Stanley Druckenmiller, but one of them. There's 3 times where you can make money in the market when it comes to a new industry. You can make money on the ride up, like you're seeing with NVIDIA, with SMCI, with Microsoft. They're just AI, everything, even Google to some extent, but that's like AI, everything. AMD, everything is about AI. So right now you're seeing this giant pull forward in demand for all sorts of AI chips. And eventually things will top out where expectations have run way beyond their value creation fundamentals. And then you'll see a giant crash, right?
mm.
That's when you're supposed to be, this is the time when you should be shorting. The question is, when is the top coming? I don't think we're anywhere near it right this second, but that doesn't mean that, that we won't have a crash. I think eventually a crash will come. It's just trying to figure out when that's going to be. And then after that, you're going to see the eventual kind of recalibration, and then everything returns back to normal, where you have the value of the technology and the value creation behind it kind of level off and grow at a commensurate pace.
But
So
it always kind of goes back to what I mean. I don't always, I'm not the biggest fan of Kramer, but there's always a bull market somewhere, right? So even if you get to a place where in 2025, 2026, you do see this AI piece really come back to, I guess, and deflate as we would probably be expecting it to, there's going to be somewhere else in the market that people can run to for safety, right? Just like how people have been able to run to tech over the past year for safety after 2022 was absolutely horrible for tech, right? So it's interesting how the different sectors kind of play against each other and what's safe and what's not. But it's an interesting time period for me because I've never really been in a place where, how do I say this? I mean, I've never personally been in a market where we're cutting rates to an extent where we are going to be able to be cautious about it. 2018, it was pretty abrupt. And so, or I guess it was 2018, we started raising rates. So I'm familiar with that. And I also saw what happened with that in 2022 when we started raising rates. I guess my thought process is I've never been in a place where we haven't cut rates immediately to zero. And I'm kind of curious if we're actually going to be able to play that safe sort of slowly quarter percentage point cut over time, get you to a stable paid place at 3%. Like I always kind of question, like, yes, there will be some parts where there's it's always kind of like a balloon, right? Expanding and contracting to an extent. My question is like, will there be some absurd gains that we have yet to realize, kind of going back to your graphic here where it says we are here, where we might think that there's been some massive sort of gains and efficiencies that we've observed through AI, but we haven't even seen the actual impacts of it yet. And so when it comes to where we're at on this sort of graphic that you're showing, that we are here, we're very, very early in this, and it's going to get even crazier than maybe what we were already thinking. So it makes me think, like, what is really crazy? Like, you'd look at SMCI, and I don't want to bring that up too much, but I'm just saying, like, you look at SMCI and be like, that is absolutely absurd, right? The
yeah.
amount of growth that's had, and to the extent, I guess, maybe of NVIDIA, but it's like, is NVIDIA really that absurd? Because it's actually being fueled by all the chip buying from Meta and Google and et cetera. And these companies aren't trading at 50x PEs, right? They're trading at 20 to 30 XPEs, which, you know, at the pace that they're growing, maybe a little bit too expensive, but it's not absurd in that respect.
Yeah, if you could put this up real quick. This is from the bubble that we saw with the .com bubble, right? Where you saw the Nasdaq Composite, you know, because it's a proxy, right? You saw this slow, steady pace of growth, right? And then you saw the bubble-ish territory, which is this right here, which is just growing from crazy amounts. And then what did you see? Eventually, it ended up retracing back to this again, right? So the question is, how much further is the AI companies, are they like going up by? And I think that's going to tell us where we are in this market cycle. My opinion, I think we're somewhere around here, or it's maybe a little bit closer to the apex. So I would say AI is still going to be a big thing for maybe 2 years. And then after that, I think we'll see a precipitous drop in the value of AI, because what's going to happen is people are going to realize, where's the monetization? Like, it's nice to say you're an AI company, but where is the money actually coming from?
But where do you run to after that, Chris? I mean, do you run to like the 70-year-old man stocks? Like, I don't want to say Verizon because I don't want to, you know, jab you in the gut. But
you short, man. Well, there's two ways that you can play. You go into deep value companies and you hide out in deep value until the carnage stops, right? And then the other option is you go against the goddamn trend. We short the shit out of these companies. Like, imagine right now, NVIDIA sells 10% less than it did last year in terms of revenue, right? The next quarter, it sells 10% even lower than last quarter. Dude, you're telling me NVIDIA, where it's currently trading at, is not going to go down 50-60%? Dude,
what's what happened with Enphase, right? I mean, Enphase, it was slow, and eventually they started cutting much deeper, but it just went revenue flat, and the stock price went from the mid 200s to the mid 100s in quick order. And then when it actually started to have revenue cuts comparatively to revenue flattening, it went to the 80s, right? And I still don't think that that's done per se. So I'm curious to see when they report this upcoming cycle where that ends up.
But I think it's still good. I think based on the spending that we're seeing from Meta, Microsoft, everyone just talking about AI, I think that's the spending is nowhere near. Sorry,
don't die on me,
the spending is nowhere near the apex, in my opinion. Right now, everything is still hunky dory, but I am keeping my eye very, very carefully on developments around AI. I want to see an AI bankruptcy. I want to see a company basically go bankrupt, and that was in the AI space, because I usually think that those are your canaries in the coal mine, which is like, let's say Anthropic says, you know what, fuck it, valuation don't make sense, we're going out of business. Really? Why? You know, is there not enough demand? You know, that's the kind of stuff that I want to see. So I want to see the smaller players in the AI space. I think those will be the canaries in the coal mine, where they're not getting enough business. And so the bulls are going to say, well, that's because they're a small player, they don't matter. But those are actually your leading indicators, because if they can't make money, then the bigger guys are going to have a tougher time as well eventually. So I'd say let's keep an eye on the market. Look at all the AI players, who the biggest beneficiaries are, and watch them for any indications that there's a slowdown coming. And then based on that, we can figure out, hey, should we be buying some long dated puts on a lot of these companies where the expectations haven't gone to the market yet? Because when that happens, dude, the risk to reward is going to be amazing, because there's not a lot of people that tend to buy puts. There's a lot more call buyers than there are put buyers. So if we do see that and we end up getting a massive correction in AI, that could be another opportunity of a lifetime. It's just a matter of when and how to time it so that you maximize your benefit. For me, I would say, based on my understanding today, I would not short any of these companies, even with puts. Like, it's just wasted money at this point. But I think
there's some outliers out there, like C3AI. I don't know what their balance sheet looks like, but I wouldn't be surprised. I mean, they're not making money at the moment, from what I understand. So, but do you think it's still too early people haven't thrown in the towel as to, it's like the ESG thing. You don't want to bet against ESG in 2020, 2021, but you wanted to bet against it in late 22 and early 23. So it's like, at what point do you do that? Because you could make 50, 60%, and that's not levered, right? If you do puts, like you're kind of suggesting, and you do the appropriate puts, I mean, you could, go up a couple 100% if you're smart and you know exactly what you're doing, right? If you lever your options plays and everything the like. So it makes you kind of think a little bit. But sorry, you were gonna rebuttal with something? Or
no, I was just gonna say, this is why Michael Burry, if you think about it, right? He's been shorting semiconductors and getting absolutely blown the fuck up. But that's usually been his MO, man, where he's been somewhat of a, like, how do I say this? Somewhat of an early caller in things rather than being right. And so I think a lot of him right now, he's probably just absolutely going freaking crazy. I don't know if he still has his short position right now. He actually bet short the SMH, which is the semiconductor market. I'm looking at it right now. Hold on one second.
But I mean, people were saying the same thing when he bought Michaels and stuff in 2020. Everyone was kind of scratching their heads, and then the whole GameStop thing happened at the end of 2020, early 2021. So everyone was kind of sitting there being like, why is he doing this to himself? It doesn't make any sense. But it is what it is. But I just wondered, while you're pulling that up, wanted to mention this. I say oil's going to zero as a joke because most people think that solar and wind are all going to take over.
I told you, man, people are going to take you at face value and not understand what you're talking about. When Matt says something is going to zero, it's actually a
joke,
a play. It's a joke. It's a play, basically, because there's so many people that says, oh, this company's going to zero. And it's like, okay, so
it's a joke because everyone in 2020, when the pandemic was happening, and ESG was being fronted on every page on the news, that we were basically going to be able to power everything with wind sails. And I'm not saying that that's not the way. I actually think that there should be a lot of transition into those sorts of things for the long term. But when you think about it, everyone was just thinking we're magically to stop using 100 million barrels of oil per day. And yes, during the pandemic, it went down to 80 million barrels during a brief period of time, but immediately jumped back up to the 90 million barrels of oil per day camp. And now we're making over 100, back to where we were pre-pandemic, if not 1 to 2 million barrels more per day than we were just 4 years ago. So it's interesting that people think that oil really isn't useful. And it's actually a pretty funny story. And I want to hand it back to Kris because he obviously has a good piece of content he wants to share with everybody. But just some of these numbers, now that we're just hitting 2024, some of the numbers for 2023 has come out where China was able to make over 200 gigawatts worth of renewable energy adding to the grid last year alone, which was 3 times what they had done in 2022, and basically almost doubled the amount of renewable capacity in the world last year, pretty much by itself. And that being said, they still have 66 or 70% of their energy coming from coal. So if you think about it in that perspective, there's a lot longer of a wavelength for oil than you really think. Think about how much capital went into doubling the renewables capacity last year just from China alone, but yet they still have 60 to 70% of their grid on coal. So anyway, back to you, Kris.
Yeah, no, it's just, this is right here. This is a giant short. He's got his number one position. According to the last filing, he's short the SOX, which is he's short the semiconductor industry. And SOX has actually rallied since then because of NVIDIA making such a large component to it. Let's see. Yeah. I mean, there was a drawdown in October. I wonder if he might have actually sold out of his SMH position. I mean, his short positions here, or whatnot. I mean, we won't know until the new 13Fs come out. But he was short around this time frame right here in September-ish, September 30th. He was short. So there was a point where he actually could have made some money and then got out of his position. But I don't know. Like,
that's the problem with these 13Fs is like people are generally, by the time they come out, it's a month and a half behind. So like we won't see the next 13Fs until 15 or so days from now. But that ended for the positions at the end of December 2023. So it's like these people can make moves either the day after it hits January 2024 or whatever. And that's also the problem with like people will like look at a move that Kris is making or something that I'm doing, and they'll look at it 3 months down the road after it's already run up, say 10 or so percent. They're like, oh, like I bought in. It's just like, dude, like you already kind of missed the boat, right? Like when Kris was kind of banging the table on an American Tower and stuff like that earlier in the year, kind of like, or not early in the year, late last year, kind of at the October, November timeframe. If you didn't get in at the right time, you already missed out on your 10 to 15% growth. So always be cautious when you look at these 13Fs. Like they come with prices on them as well most of the time. You can kind of understand what price and when they kind of purchase them, and you can kind of look. It's like, all right, it's about the same from where it was in 3Q, and so just be cautious, right? Don't get yourself caught up because you see some sort of billionaire making the right or wrong decision. It also could be a hedge too. So keep that in mind. Is they might buy something because it's a hedge.
Yeah. Just as a full disclosure, I sold out of American Tower and Crown Castle not too long ago. Main reason why I sold out of them, two reasons. One, the expectations for future growth for both CCI and American Tower have actually come down significantly. When CCI reported this week, they actually showed that the impacts from their Sprint closures, like basically determinations of the Sprint leases on their towers, is actually materially impacting their revenue. That's not good, and their growth. So I think that they're going to underperform for a few years until the rent escalations eventually catch up and they return to growth mode again. But I would say that any further dividend increases for at least Crown Castle at the moment is going to be muted. And that also means that at the current valuation, they generate about a 5.8% dividend with 31 PE. A lot of people that are going to be buying this are going to be buying this for the dividend growth. And the dividend growth, I don't think is going to be coming anytime soon. So in my opinion, Crown Castle and AMT are probably not the ones you want to be holding. If you're looking for growth in capital appreciation, if you just want a good, pretty secure dividend, then Crown Castle and AMT are fine. They will still grow their dividend. It's just not going to be very significant anytime soon. And I think Crown Castle, let me just hold on one second. Last quarter, they actually did not grow their dividend, which in the past has always been one of those things. Yeah. So see this, if you look at Crown Castle's dividend growth because of the additional revenue, right now they generate about a 5.7% dividend. You see this right here every year, how they've been able to successfully grow their dividend. They went from 120 to 133 to 147 to 1.56. This is like a 6 to 7% growth rate on their dividend per year. This year, they did not do that. This year, they freezed it at 1.56. So the dividend growth story may be on the fritz, and so this way the valuation is going to be a little bit more muted. And so I don't know, I would say that this one is not a buy for me at the moment. I made some money on it, and I think I'm just going to take some money off the top and just chill. When I see that the growth is starting to kind of level off and starting to come back, maybe in a couple of years, that's when this will be another time to buy in again. But as of right now, I am not the biggest fan of Crown Castle and AMT. And I know that's a pivot, but that's how the data works. So you got to pivot.
Keep in mind as well, like when people talk about dividend increases, it's done like, yes, you might look at it on a rolling 4-quarter basis, but in reality, it's based off of fiscal year. So what you saw was Crown Castle raise their dividend in December of 2022. And so that means that they basically were able to get an increase for fiscal year 2022 higher than it was in 2021, because you had 4 quarters of the higher dividend in 2023 compared to 2022. The full year 2023 dividend, even though they didn't raise it on a quarterly basis, is still higher than 2022. So technically, all they have is they have to raise it by December of 2024 to remain in the good graces of being a dividend payer or raising dividend payer. So keep that in mind, because there's been a couple companies that probably people think like, oh, it's the annual. And yes, generally speaking, companies raise it on the same kind of annual, whether they normally do it in September, December, etc. But when companies are facing times like this where they're trying to count their pennies and they kind of use this to their advantage because they still have 2 or 3 quarters of additional time before they really need to make that decision and come off of any sort of dividend king lists or anything like that. And that kind of might seem counterintuitive, but you think about it, we do all of our fiscal year reporting for earnings, etc., on an annual basis, right? Why do that any different from a dividend perspective? So while they didn't raise it necessarily this past quarter like it was expected, they still have a couple quarters left. So yeah, I'm curious, Hot Kris, is there any other companies that you're really looking at? I know I'm excited for Amazon on Thursday. I'm honestly thinking that JP is going to hit us with the hammer of God tomorrow. So I'm kind of bracing myself and expecting that. But is there any other companies you're really putting your eye on to? I'll need to make the adjustments for AMT and CCI in the
portfolio.
Yeah.
I don't know, man. China looks a little interesting from a valuation perspective, but China's dictated more by politics rather than actual fundamentals. So I think they are in the point where they're accelerating their what's the word? Their support for the economy, which could mean that we're seeing a bottoming out of a lot of their tech sector. But we'll see. I'm not 100% confident just yet. Any buys right now would be a very, very careful buy rather than expecting a lot really quickly, and understand that the bottoming process is going to be a while. I guess the best one for me right now is just Celsius. I'm actually kind of bullish on Celsius. I think people are somewhat leery of Celsius primarily because I'll answer that question. Primarily because they've seen such a big run up in Celsius that people are thinking, oh my God, I missed out on all the gains and all we've got is in the future, like a downward trend. And so some people have been selling, and I'm looking at the numbers on Celsius, and they're very compelling, and I'm seeing that they're expanding it to different markets. There's still a lot more room to run forward, in my opinion. And right now they're trading at levels that were the same levels about 7 months ago. Right. So if you look at its July numbers, they're close to them. Right. And so they've actually improved their numbers last quarter. And I think they're going to keep going further up. So I think right now we've got a little bit of a gift in Celsius. Might be we added to the position on it.
Yeah. Yeah, we have 5 shares in the public. I added my own personal. I sold out of one of my dividend plays and took some 2026 leaps, and I'm selling short dated calls on it. But that's pre-earnings, right? I anticipate earnings will be rather good, even though Kris did a lot of due diligence. If you guys are actually curious about his Celsius play, he's done a lot of due diligence, and I agree with a lot of what he put up there. He articulated extremely well on the Patreon. I don't know how many spots you have left, if you have any, to be honest, but I thought it was really well done. And I know a lot of people in the Discord have also started to look at it as well.
I'm telling you, you have to buy the fear. When the market starts to be scared, that's good opportunities to buy, right? So right now there's a little bit of fear in Celsius. I'm not going like crazy all out, but what I am doing is slowly adding to the position right now. And I think this is the key, right? Where expectations. They're setting up for really good expectations in March, which traditionally, if you think about it, it tends to be their weaker part of their revenue growth story. So there's a huge amount of seasonality in Q4 numbers. So if there's a lot of seasonality and a lot of that stuff is being baked in because of that short report, I think that the expectations, because they're lower, Celsius has a chance in March to report way better numbers and way better guidance, and thus the stock will start to go up again. So that's my short-term bet. Long-term bet is that these guys are still performing very well. I did a model on my own, just to figure out what kind of growth that they're projected to have. I'm looking at social media. I'm looking at everywhere I can about this, and I'm comparing them against, and I'm comparing it against other CPG companies that are in the same area and then going based on that, so see, okay, where are the valuations for something like Monster and Red Bull? Red Bull is a private company, so you're not going to see that, but at least for Monster proxy, you can see that there is a channel on what is that thing called in terms of valuation. So you could theoretically model out, even with a slowing growth, where the stock price should be relative to its near peer in Monster. So, I think right now a lot of people are just very leery because they saw the huge run up and they don't think that it can go any further. But I see a lot of linear growth for these guys, not linear, exponential growth for them going forward, especially with new markets finally starting to be tapped. You're seeing the consumer behavior starting to gravitate towards healthier energy drinks. You're starting to see people replacing their Starbucks, which is like $6-7, with a can of Celsius. My wife got this for me, by the way. I'm trying different Celsius flavors. I tried cola, and it was not as good. I wasn't a fan of cola. Nah.
I'm not. Yeah, I had crap. What did I have the other day? Strawberry guava. That shit put me. That had me hopping yesterday morning. But I think the thing that got me most lit to, I was observing for quite some time, and back when a little bit before Tevis was starting to get all hyped up about it, because I know when it dipped, let me get it dipped in like the September, October timeframe. And I think this is when like Tevis started getting pretty bullish on it. And I was like, okay. And this was like just about when I was about to buy in, and it started running up again into like the early January timeframe. I was like, I probably didn't get the best opportunity to buy into it. And then it pulled back more recently, I think with news of more insider selling and a downgrade or something like that. But with that, I took the opportunity because I was like, okay, I honestly do believe this is going to continue to grow at least 50%. I'm honestly more so thinking it's going to be 75 to 85% year over year revenue growth comparatively to fourth quarter of last year. And just the amount of marketing step up that I've seen and the expansion within the UK and also into Canada. And I don't know if it said Mexico as well, but multiple countries, right? And I'm just like, okay, this isn't stopping like at all. And I see more and more people at work buying it. We have a little commissary downstairs where you can buy. And I noticed that it's like almost always empty, and it's replaced several the other energy drinks that people used to drink. So we used to have Rockstar, we used to have Monster, and pretty much the Monster section has been moved to about half the size. The Rockstars are completely gone. And now we're mostly doing like Celsius Rain, which is a segment of Monster, and then Monsters. But Celsius continues to get that kind of advertising. Every single gas station I go to, they have the little Celsius signs above the pump now. It's just insane, coupled with a lot of the marketing that you kind of showed me on your due diligence post, as well as just like what I'm just seeing literally everywhere on social media. It's just like it's insane, and I think it's going to continue to persist. And I think that it hasn't hit a point yet where it's saturated. And when the fad is there, I think you really need to buy into it. Is it late? Of course, but you can still make a crap ton of money. Just like, is it late to buy Google? Of course. Is it late to buy Amazon? Of course, but there's still so much.
It always feels like it's late because you missed out on
like,
the run. Yeah.
It's just because it's up 4,000% doesn't mean you can't buy it,
Yeah. And I just want to say, dude, our comment section is blowing up with all these people that love Celsius. It's kind of crazy. Like everyone's like Celsius, Celsius, Celsius. Interesting.
Even my sister who's against energy drinks is all about it. She's a nurse.
Well, here's the thing. Like my wife's a pharmacist. I had her take a look at it too, right? So here are the main components in Celsius. The fat content is 0, but that's to be expected. They don't use anything. The sodium, which is really important if you have high blood pressure, you do not want sodium, right? So that's 0. Carbohydrates, which is sugars, that's 0, right? Protein, of course, is 0. Then you have like calcium, but the only thing that they have in excess, which is technically a vitamin, but I'm not sure, is biotin. But if you look at the flavors, like what's in there in terms of ingredients, the ingredients are carbonated filtered water, citric acid, and probably the worst thing that's in there technically is taurine guarana seed extract, which is okay, and then caffeine. They've got a ton of caffeine in there. Ascorbic acid, which is good. Green tea extract, calcium carbonate, not too good, but and sucralose. Those are like the two things that are not so good.
Well,
but
I was waiting for you to
the
say like
most part,
aspartame or something, but
no, the rest is pretty good. Like it's like I said, it's not something that I don't think it's that bad, man. Very interesting. And the thing is, like, it really does work. It does give you a crap ton of energy in a short period of time. A lot of people use it for pre-workout, so this way you're not getting this bloated feeling also. So a lot of times people will drink stuff. So no fake coloring as well. That's good too. Yeah.
I
Hail
was
the greats
surprised
like
because I literally had a cup. I went to Dutch Bros the other day and got a coffee, and then I came home and I was still like cranking out an article for Seeking Alpha, and I was just like, well, I had like the cup still with ice, and I was like, well, let me just pour this Celsius in here, and I was surprised that it was clear. Like, how like you get the monsters and you like the green is real, like it's actually green, like liquid that you're drinking, but the Celsius is actually anyway, just some thoughts. Excited. I know Tevis is a big guy on it. He when he went to go visit Austin, he bought like a couple packs to bring home. Now he doesn't, hopefully he doesn't have to. You can just go to
No, it's in Canada.
Yeah.
By the way, Tevis, you and God, man, this is fucked up. Tanner. I can't. Ever since someone called Tanner the white Steve Urkel, like every time I think of Tanner,
I did not see that.
I think it was TJ that said that, or someone, man. It's just really funny. But Tanner and that, they did a great interview. Y'all should check out on Stock Tanks, where they actually brought Jonah Lupton, and he did an amazing job just presenting the bull case on Celsius. I'm totally with it. I looked at everything that was in there, and I think this company's got huge potential ahead of it. This definitely, to me, feels like the next Monster, and I think it can grow into that, but I think it can grow into a Monster-like valuation probably faster, mainly because Monster grew in commensurate with the energy drinks market versus Celsius, which is disrupting the already existing incumbent. So your growth rate, especially, you're getting the natural market share growth of the energy drink segment built into your equation, but then on top of it, you're going to be getting the giant increases from from market share gains. So I think to the degree right now, I think that it took Monster 10 years to get to a valuation that where it is, which is like 50 billion right now. I think they can get there in 5 years. So by 2030, this will be easily a $50 billion company, in my opinion.
I don't know what I'm gonna do, man. I mean, I'm long. I think that I have 24 months, 23 months, I guess, to really get a play out of it. I'll be writing the short dated calls. I'll take a pause. I think I have February 2024, basically the last week. I think it's February 23rd, where I'm just slowly chipping away at my cost basis on my leaps. But I won't sell one over the earnings period because I feel like we'll have a boost. And my hope is that this thing blows back past $60. And I'm writing covered calls in the $70, $75 range. And shit, I hope one quarter it decides to just blow the hell up and gets called away at, $75, $80, because if that's the case, I'll just close out the position if I can't roll the call for a sufficient amount of time and pocket the difference, because, it'll end up being a pretty good chunk. But I hope I'm able to keep it for the long haul. Holding it to 2026 might be in the $75-$80 range by that point, maybe even more.
So everyone in the chat, what's your favorite flavor of Celsius? I'm going to put it on Twitter. I'm going to do a poll on Twitter. I personally, my wife got me two things so far. I got the cola one, which is okay. I'm just not the biggest fan of it. The other one, which right now I have sparkling watermelon, and I think I've got one that's a fruit punch one. So I'm still in the process of discovering which is my favorite flavor.
Me too.
I used to be a monster. I used to be more of a Red Bull guy. Like, I love Red Bull, but I can't drink it anymore because I hit pre-diabetes. I don't know. I spoke about it on FJ. So I have to cut back on sugar, and I still want to work out, and I need energy, right? So now I'm cutting out certain foods. So I want to lose weight. This is perfect. So tomorrow I'm gonna go to the gym, drink this, be ready to work out. Now I have 0 calories that are gonna be getting put into my body, but I'm going to have calories leaving, which means I'll be able to lose weight, and this will help me help accelerate the thing. The other thing is, I realized, without any sort of additional mental focus, because caffeine is a stimulant, it'll give you that mental focus sometimes. I need that to get through the day sometimes. So that's why if you look at a lot of people, so I would say to people, think of this as a pharmaceutical company more than a consumer package company, because at the end of the day, that's what they're doing, you know.
I'll say, man, a lot of people putting flavors in the chat that I haven't seen, so that either means people are buying the crap out of them and I'm not getting to them, or so I'm curious, man. Maybe I should order some off Amazon and try some of the different flavors, because people are talking about lemon lime. I haven't seen that.
You could get a variety pack. You can go and get a variety pack.
I might have to, but I want to say one last thing about Celsius, and I don't mean to like say that's the end. If you have other things, feel free. I know that Celsius is onto something, because Reign, which is owned by Monster, I don't know if you've seen this yet, is making smaller, more light sort of cans of Reign. So now they're called like Reign Thick or like Reign Vibe or something like that, versus like I don't know. Let me see if I can find energy drink. Light.
By the way, Amazon, they one of the things that these guys did really well is sell directly through Amazon, and they are the #1 energy drink on Amazon, and they do 1-day delivery on Amazon. So like, I ordered the cola, I got an entire case of it in like a day, like the same day, you know. So maybe order the variety pack and see if you like it.
Yeah. Oh, I will do that. Yeah, Rainstorm. That's what they're called. Clean energy. Huh. Seems pretty familiar, doesn't it? But like, if you think about it, Reign was like very much like a Monster-like drink, right? Where it's like in these dark cans that are kind of going after probably the hardworking guy. But now you're looking at these fit or like clean energy drinks. So it's pretty interesting that you see this, and they're literally right next to each other. They're advertising increasing metabolism, etc. So it's like, huh, interesting. So that to me means that even Monster, who owns Reign as a parent company, is even scared and is looking to make sure that they diversify into that sort of market to help provide headwinds against Celsius. So that to me means that Celsius is on something.
Yeah, check it if you guys want to check it out. They have, I think, a special on Amazon right now. It's the #1 bestseller in the food category.
Oh, $18.
You could get a variety pack. It's like $18 for 12. That means like it's $1.25 a can. You know, so might want to go, if it's not available locally, you could always order it through Amazon. You know, like I said, this way you could try all the flavors and see which one you like.
Yeah, I wish we will gladly talk about Celsius every episode if they sponsor us.
Yeah, you know what? They actually do have a program for that, but I feel like they wouldn't accept us because we're a little bit chunky. You know, most of the people that I've seen drinking this stuff, and they're like super fit. They're going to the gym all the time. They're like these young 20-year-olds, you know, like all these college campus girls, you know, and we're just a couple of fucking schmucks. Just hey man, what you have for dinner, you know? So I'm 100%. I'm not sure we're the marketing that they want to go towards, you know, be like, but we'll see. Maybe what we can do is entice them, say, look, we are looking to lose weight.
We'll be the Jareds, except without the molestation of Celsius, right? We'll end up we were drinking Celsius, we lost X amount, right? 6 Celsius a day.
Yeah. We gained money on your stock and we lost the weight drinking your drink. So there you go. That's the sales pitch. I'm gonna send the CEO an email. Maybe they're still small enough to the point where they'll actually listen and be like, you know what? That's what we need. We need a shareholder base and a consumer base aligned. And there you go.
Man.
Yeah.
Crazy.
I'm gonna be a Celsius guy in chubby shorts. Yeah. Bro,
Jeez.
here's the thing, if I lose like 50 pounds, I am gonna do a Jared. You know what? That's what I'll do. I am going to do a Twitter thread every day. Maybe not every day, Twitter thread. I'm gonna do a Twitter post. My current weight and start doing workouts and use Celsius and then guide it and see after 6 months what my weight is, what my because I have right now what is that they called my
Fitness
results.
Pal or
Well,
oh, okay.
I just had a blood test yesterday. So what I'll do is I'll put my blood test. I'll publish. I don't really give a shit. So people can see what my A1C looks like right now, what my sugar looks like right now, what my BMI looks right now, and then after that, I could just do an update every month or two and just see where it goes. And let's see. I mean, maybe a day, maybe just do 1 Celsius per day and try it for maybe 90 days and see what the results are. And then on top of it, layer in working out and eating healthier so that this way it'll be like a Jared situation. And maybe we could get sponsorship after that. Where
Maybe
Cashflow
then,
Chronicles
yeah.
can be sponsored.
Cashflow Chronicles sponsored to you by Celsius.
Yeah.
Somebody said Celsius Daily. I like it. I like it.
Yeah. Nah, man, there's not enough content for that. I mean, the biggest news that I would say for Celsius that is a game changer is just how many partnerships that they've been able to do and the distribution that they've been able to get from what is that thing called from their Pepsi partnership. So I think a combination of those two things can be reported on somewhat regularly, but I'm not sure it's something that like you could make a new news channel out of like every day.
I'm honestly curious what your thoughts are because I mean, Tevis said it earlier about Pepsi potentially just saying, and enough is enough. We're buying the company, but at what point? Because like you remember, we talked about this the other day. Pepsi bought Rockstar for is it 2.5 or 4.5 billion? I forget the number, but do you think they have big enough pockets to be able to afford a Celsius at 11?
Yeah, 20 billion. They could double up on the premium and say call it a day. The problem is you're going to run into is that, well, now you don't have that problem. The founders, a lot of the founders have basically passed away.
Yeah.
A lot of the selling that we've seen lately is primarily coming from the heirs to pay taxes and all this other stuff. So,
which is another reason why I'm slightly bullish, to be very honest with you. Right?
Yeah.
Like the fact that once that's done, this thing's going to go on a jog, in my opinion, because that's been the whole depressor to me. I think that's honestly been because if you remember, I think it was back in August when unfortunately the gentleman passed away, the main big guy, and I maybe do some more research on it. And maybe Steve, when he wrote his Celsius article, did that. But basically you had this big pop-up after their earnings report, and then you basically started going sideways kind of thereafter. And my thought process is okay, once people got access to the shares and were able to start selling off the shares, it's been able to kind of stay flat because you have this consistent buying of underlying people that want to get into the stock, but you have this overlying selling of, say, the heirs that are trying to get out. But overall, if you think about that, how many billion they probably had like $1 or $2 billion worth of shares. So the fact that they're selling off that much, and it's significant amounts, millions of shares. The fact that it's still able to stay flat means somebody's buying. And so who's buying? Is it institutional? Is it schmucks like me and you that want to be the Jared of Celsius? Like who's buying? Maybe it's all Tevis. I know Tevis got that money. So maybe that's who the hell's buying, keeping this thing flat.
I think it's found some support levels. Vince is like watching it on Twitter. No clue if it's really live. Yeah, it's live, Vince. But you can't.
It is weird. You can't see you can't see YouTube's comments. So it's kind of a pain because it forces you to kind of interact.
Vince, do some research on Celsius. We could use another bag holder. Come on, join us. Come on, join these bags, man.
Yeah,
we're going from the Palantir community to the SoFi community to the Celsius community.
We're just as some people call what did somebody call me? Oh, a grifter. Yeah, somebody called me a grifter. They're like, oh, you just moved from stock to stock. So yeah, maybe my new stock is Celsius. Maybe that's what I'm trying to grift people on.
Yeah. Tavis, like, my money is going to the actual product, bro. Yeah,
Amen.
yeah.
Cool. All right, my friend. Well, I appreciate you staying a couple minutes later than normal. Hopefully
Yep.
everything goes well. I
Appreciate
am
it.
going to go buy that relief pack, but hey, you don't feel obligated to stay. Vince and I are going to do a live on my channel about Rocket Lab. They have a launch in about
Yeah.
an hour and a half, 2 hours or so. So I know you
Okay.
got work and you got the boss lady,
Yeah.
but yeah, for those people that are watching, the 100 or so of you, if you guys are up and around, for those of you on the West Coast, we'll be chatting up on Rocket Lab in about 2 hours or so with
Yeah.
Hot Vince. And I'm sure Kris has one or two other things that he wants to say.
There's one thing, and I know maybe Tevis, you guys have already seen this. There was a really, really good interview on the bull case for Celsius. Let me just bring it up real quick. Outside of the ones that Tevis and Tanner did, which was good also, which is from Dumb Money. It's called Dumb Money Live, but let me just put it right here in the chat.
Oh, that was a couple months ago, right?
Yeah. And so they did a really good job breaking down the bull case for it. And like I said, I think we're still in the early innings of this.
I'm curious because they have a big Discord, Kris. Do you
I'm not in it. I'm not in it. I have
so
many things going on.
I'm curious if they're still bullish or if they made a quick trade, because I know generally they buy like their options plays and then they get out. So I'm curious if they
I think they said that they were they said that they were going to be a lot more long term with this one. So there's a mod in their Discord. Okay.
Maybe that's why. Maybe he's trying to take credit like he discovered Celsius, but he really I'm just kidding.
So Tevis, do they still have it?
They swing it, they said. Okay.
They swing, but but usually, but I'm saying for Celsius, do they still have it, or this was just a swing trade for them?
Somebody says they went in 100%.
Yeah. No, they went kind of deep. I think so. Okay.
I think so. Okay.
I think so, as in they still have it or they sold it? Just
I think they still have it, I would assume.
Yeah.
Interesting.
Yeah. Oh, I'm still good. Okay, there you go. They're still long. Yeah. I'm long until 90 for the next couple of years. So that's where my head is right now. So
90, you think? Yeah.
I think 90, 100. It could even go further up. I mean, right now the growth expectations are a lot more muted than people are, like, in terms of analysts, I think are a lot more conservative. So I'm using even more conservative numbers than what the analysts are projecting out. And I'm still seeing a $90 price target by 2026.
Mm-hmm.
So just like I said, that's makes it
I honestly am curious where they come in for fiscal year 24. Like when I remember, I don't want to give away too much about your Patreon, but it's like you were talking about how they kind of have the seasonality in the fourth quarter. And I honestly don't think it's going to go down. I think it's either going to stay flat or up. And if that's the case, we're going to lead into a great 2020.
I think it could do all three things, right? It could either be slightly lower, which wouldn't be good because the market's like, oh my God, look, they're slowing down. It confirms everything the B of A analyst said. It could be flat, which is the same thing, which is what the B of A analyst said, that they were flatlining. And then last but not least, the growth could be very muted compared to last quarter, which also lends to the credibility of that B of A guy. It says, look, their growth is not as much. So that's why there's some short-term material weakness. But I think once you get past that hump and then the spring and summertime comes in, boom, it's going to be up. So right here, I work at a commercial gym. Celsius is always the first to go. Sometimes our supplier can't even get an order from them. I mean, you're seeing real world people. Like, look at our chat right now. Okay, these are just random people that are joining our chat, and all of them. This was not the Celsius podcast. This was not brought up but random people.
Until tonight. We are rebranding. No, I'm just kidding.
No, but the thing is, they have been saying how popular Celsius is. If you want a typical, like a Peter Lynch play, this is the Peter Lynch play, where you're seeing the general market push a product, and all you have to do is just follow the general market. I sell Celsius at work, and it goes fast. My brother has a gas station. Celsius is moving there too. So just letting you all know, in the cities, they are absolutely on a tear. And I think even their strategy in terms of marketing is amazing. So I think we're very early in this. So dedicated fridges at checkout. Yep, they have great dedicated placements in the stores. I saw the same thing in Florida. I went to 3 places and Celsius shelves were bare. Absolutely. Absolutely. They're all over college campuses.
Fucking great. Oh, good. Cool. All right. Well, I appreciate it, my man. I'm gonna get the timestamps up for anybody that wants to watch the replay. We're putting replays immediately as soon as they're available onto Cashflow Chronicles, the I guess secondary channel that we're eventually going to stream from. So let me just make sure for those of you guys that have yet to have the opportunity to join that, to be able to check that out. Kris, appreciate you as always. Great conversation. Any last words before we call it a night?
No, I think that's it, man. It's a pleasure to be back in somewhat normal state right now in terms of, because I was sick for the last 2 weeks. I still have the residual cough, but it's starting to go down. The only thing is when I talk fast, it comes back. So,
Yeah, you're the man. All right, my friend, much appreciated. Everybody, please take the opportunity to look at the new channel and subscribe over there. We'll be back tomorrow if Kris has the opportunity to make it, and see you guys in about an hour and a half for Rocket Lab launch 4 of a kind. Talk to you guys
later, guys. Take care.